The following presentation is brought to you as a courtesy from Forex Academy. This is part of our service, Psychology Trading. If you find it interesting and wish to be updated on new releases, please subscribe to our YouTube channel or join our community at forex.academy and receive all our services for free. Your like is also highly appreciated. Enjoy.
Hello, Forex Academy subscribers. Today's video is a continuation of the market psychology and trading psychology and the trading methodology. And we've already gone over in the videos a lot of lecture, not a whole lot of lecture, but it's lecture nonetheless, of PowerPoint discussing how we are our own victims in the market, that we're the ones who lose the money. The only reason that we lose money or kill our accounts is because, well, it's our own fault. Okay, nobody else to blame except for us. So what I want to go over right now is one of the pitfalls of trading. I wish I would have done this earlier today, but this is my account here. This is a live account, and we can see I have 11 full lots active right now. So I'm 5 lots short on the dollar yen. I'm 2 lots long on the Aussie dollar, 2 lots long on the gold dollar, and 2 lots long on the pound dollar. All right. And I'm currently in the negative 231.62 cents. And that's not bad considering how much is exposed right now. But the thing is that at some point, because I have a longer time frame on holding these, I'll hold these for a few hours or a couple days, I can be down a few $1,000 on some of these, or I can be down to a point where I get kind of worried. And if we can look here, this is the last month's performance till now. So this is from 5:30 to now. So I've got $3,885.74 of profit so far. But if I look at a lot of these trades, I've got some losses in here that I've had to take. Like a $483 loss on the dollar yen. All right. During that trade, that was a short-term trade. It wasn't going in the direction that I really wanted it to go. So I had to exit it. And if we look back even farther here, and I'll talk to you about this trade. I want to point this one out. So I closed this one this morning. This was a $4,203.39 win. And I had that open since the 5th. All right. Had it open since the 5th, and it closed on the 7th. All right. The time frames here, you can't change these, but I closed it this morning in Central Time. But let's look at the euro for a second. So I was short 5 lots, or I was long 5 lots on the euro on the 5th. And so let's go to, I really hate MetaTrader. I abhor this system. But all right, so I went long here on, okay, the 5th. I'm just going to look at TradingView. The euro. Okay, and let's bring us down to the hourly. So on the 5th, I went long, and I went long during the early morning when I got up. I went long here. I remember I went long on this fib level in this square of 90 at, well, hell, it'll tell me when I went long. At 1:17:30. 117.30. Oh, actually, I went long over here somewhere. Right there. Okay. And when you're short, when you've got 5 lots and you enter into here, because I went down how far? Went down to 1708. When you're long 5 lots and you travel down 30 pips, you can do the math. That's every 10 pips at 5 lots is $500. So, you're down $1,500 in less than an hour. That can get on your nerves a little bit, because I don't like to trade with stops. Well, I take that back. Stops, I'll get into that. Stops during a new breakout, I use them, but during a actual moving trend, I try not to. But we were looking at a new breakout. I used a crap ton of stops actually over the last week. But the point is that when you're down $1,500 in your account, that's a little stressful. That can get to you. You get a little antsy, and even when you've had to take like bigger trades that are losses, like $878 loss on gold, and on the shorting of gold was because of the proximity it was to the trend line based on the oscillators, but the trade just didn't work out. Gold has been whipsawing all over the place, but I mean, this is an ugly chart. But I had been short the gold. I had 4 lots total open, and I had to take an $878 loss and a $976 loss, and that is kind of how these things just work out sometimes. But the point is that kind of money is a big deal to me. I mean, I make my living trading, and losing, it may not be a lot for a lot of people. I know a lot of traders, this is chump change to them. I know a lot of traders where this is a lot of money to them. I don't think this is, it's a lot of money to me. This is how I pay my mortgage and my vehicle, keep my family fed and clothed. That's how I pay for my wife's silly looking Audi. It looks like a pregnant roller skate. Oh, she hates it when I say that. It is a pretty badass car though. Anyways, the point is that we have to be confident in the trade that we took. And I talked about this in one of the videos, where when you enter a trade, assume the money is gone already. I had a mental and a physical stop 50 pips down. All right? That I was comfortable with. But how do you stomach that? How do you stomach a trade that you've spent so long looking at, and you're like, okay, I know that the trend here is going to keep going up. I want to get in the entry, either in like a breakout of some type of high near an angle of some sort. How do you cope with the loss on paper? I mean, because really, you only lose money when you leave a trade. You only gain money when you leave a trade. Everything that is there on paper that is moving every time an instrument ticks up or down, that is all hypothetical. It can change really fast. Very, very fast. We know that. But the point is that when you put a trade on, assume you've already lost that money. Whatever your dollar, euro, franc, whatever currency you're trading, that's your own home currency that you use. For me, it's the dollar. I want 40 pips out of this trade. I'm willing to risk 20 of that. How much money is that? That's $1,000. I'm willing to risk 20 pips for 40 pips. So what you got to do is you got to get into the habit of, number one, quit looking at your balance. And then number two, be comfortable with that money that you're putting out there to risk and assume that it's already a loss. It's easy to say, well, just don't worry about it. I don't know how to do that yet. I don't know how to not worry about money that I have exposed. I still get a little anxious when I see my account is down on paper 10 grand. That makes me not feel very good. But I have to know that I have already assessed the amount of money that I'm willing to risk on the trade. I take a trade that I know has a high probability, it has a high positive expectancy for being a win, and I need to risk the proper amount to see if that will play out. And so if I'm willing to risk $1,000, I just mentally remove $1,000 from the balance. I just take it out of my head, out of my mental ledger, and I believe that money is missing. And so if my stop does get hit, I'm not surprised. Because you should not be surprised if your stop gets hit or you lose money on a trade. That should not be a surprise to you. Just think about that for a second, how weird that is. If you are trading, you have to spend your own money you have to risk. We talked about this in the first video, that trading is antithetical to normal human behavior. That you know that you have to risk money in order to earn money. And we know that's part of the game, but for some reason, deep down inside, we don't think we should have to lose money. For whatever reason, we have convinced ourselves that we're willing to do this, but we're not willing to accept the consequences. We're willing to put money out there to make money. That's cool. I'm willing to make money by risking money, but I'm not cool if I have to lose money on that. That is not something I'm prepared for. That is a weird part of trading for new traders, and it's a weird part of people who are veteran traders as well, is that even though we sometimes get upset about the loss of money, if you think about it, we really shouldn't, because, I mean, we knew what we were getting into, right? You get into a trade, you know what you're getting yourself into, right? If you don't, that was the problem. If you don't know why you're upset, then that was the issue. If you don't know why you entered the trade, I mean, it's irritating. Humans we're so fickle we're so sensitive to the loss of money. We're just very, very sensitive to it, which makes sense because, I mean, it's needed for everything. To eat, clothes, your vehicle, where you live, buy and sell, you need money. So it's never fun if you have to lose it if you didn't get anything back for it. But the point is that we have to get to a point in our trading where we are not going to affect the outcome of the trade by leaving it early. You let it play out. And if you have to, don't look at it. In fact, that's a good strategy for any new trader, is that you've spent some time analyzing it. You've spent some time looking at your trade. Like, I bet mine's more in the loss rate. Okay, well, it's still sitting there. But if we get down to, I don't know, minus $1,000, I'm just leaving them here. I've got some stops set. I think I've got stops on all of them set because we're near that new breakout zone. But I've got stops set, and if they get hit, it's not a surprise to me. I know how much money I know how much money is at risk here. The worst thing you can do is this, because I bet a lot of you have done it. I'm guilty of it every once in a while too. Any trader who tells you differently, they're lying to you. They are. I'm sorry. People who say, I don't ever move my stops. Or if they say they never trade with stops. Those are all pretty much lies. And if they're not lies, that's dumb. I often trade without stops. I don't always trade without stops, but I often trade without stops. But when I'm near a new breakout zone or a continuation of a correction, I like to have some insurance because there are a crap ton of whipsaws in there, and I do not want to participate in that whipsaw. I'd rather get stopped out of it instead of staring at it without a stop, wondering if I should go or not, because then I mess up my own trade plan. Anyways, but if my stops get hit, that's cool. I have been trading long enough where I'm okay with the loss here. I've already determined that this money is missing out of my account. Like, this is telling me that I'd be down $460 if we get tagged here. The gold trade, I'd be down $700. The I looked at that one. Where's the other one? Oh, pound trade gets tagged $1,000, and the dollar yen, we get tagged 1,500. All right, so we've got like $4,000 worth of exposure here, but I've already planned that in my head that is okay. That's okay to do, because the trades that I've taken, I took with my own analysis and my own work, and I determined that it was worth the risk, and I'm going to let it play out. Don't move your damn stops. All right, move your stops if something's moved into profit, and move it to a place where it's somewhat in profit, but you don't think it's going to get tagged. It's okay to move a stop if you're moving it into profit after it's crossed that entry zone. That's okay, but don't move the stop loss because price is moving it. Don't do this. Oh my gosh, the euro's trading down. Oh, or the Aussie dollar is trading away. Oh my god. I'm just going to put it down here. This is the worst idea ever. People do it all the time. Yeah, my profit target is 60 pips away, but I'm willing to risk this much. No, that makes no sense. Think of it in probabilities or in risk reward. Does it really make sense? No, it doesn't. Keep it where it was at. Okay? These are hard concepts to practice. They are hard concepts to follow. This is not easy to do. Trading is not easy to do. It is a very, very difficult road, and it's very hard not to get worried about this. But I tell you what, you want to know one of the big secrets in trading? I think it's genius actually, but one of the biggest things that brokers and trading software does to how they get your money so easily is they leave this thing on the screen all the time. So you always have to see this number. I don't have to. I can go to account history and I can just leave it there and not have to worry about what my current trade is, or I can just hide it. But one of the biggest things that brokers will do is, and you don't even notice it really, is that the thing that causes you the most anxiety, that balance, this paper loss or gain, this is what causes you to get out of trades most of the time, because instead of focusing on the trade and the performance of the trade itself, on whether it's doing well or not, you're more focused on this number down here. And when you're worried about the money you have or you don't have, you cannot trade effectively. It just does not work. And so you become victim to your own anxiety. You eliminate all the work you've done on a trade because you're afraid that you're wrong, because it's not fun to watch your account balance go down. Okay? Like it is right now in the Aussie dollar. You just gotta ride this stuff out. Now, I will say that, oh God, no, it's not. Never mind. you have to get to a point where you're used to this emotion of anxiety. I remember reading a couple blog posts on futures.io where people were asking, well, how long does it take to get successful at trading? And I remember a few people who I know are legit private traders themselves. I know they said $30,000 accounts is what you have to blow before you get good at trading or before you start to become profitable or being able to go flat for the year. And I think that's true. Because trading is either going to, it's rarely going to make you successful right away. And actually it's bad if it does, but trading is either going to kick you out early, and that's probably good. It'll kick you out early and then you just walk away from it, which is awesome. I regularly discourage people from trading. I think it's a fool's errand and I think it's dangerous. But I also believe in it being successful if there's quality education. That's why I'm here at Forex Academy, because I saw and got into and fell for all the crap that is out there. All of it. Moving average crossover systems, email alerts that said you'll get 300% every month. I fell into that stuff. I was an idiot. I was new. And I got desperate for those things. But here I want to make sure that at Forex Academy, we're giving you proper, honest information and not filling you with a whole bunch of hope. I just want to fill you with truth. And the truth is, honestly, I don't think you get better at this career until you are going through the emotional and psychological hell that trading is sometimes. It's easy to get comfortable making money. It's easy. It's very hard to get comfortable and get used to losing money. All right? That's very hard to do. Not many people can do it. It's not natural. Only through continued exposure to situations where you are trying to keep yourself calm and even-keeled and logical during a large account drawdown or when you have to eat a big loss. Only through repetition of that and getting used to that kind of that emotion and psychological response to that loss and pain and suffering, that there's no replacement for it. And that's why I think paper trading is pointless. Trading on a paper account, unless you're learning market basics, I think it's horrible to learn how to trade that way. It doesn't teach you anything. Oh yeah, it'll teach you how to trade mechanically, but it doesn't do crap for you when you have to use your own money. It just doesn't. Anyways, I was hoping we'd get a little bit more drawdown and could go through that, but again, if you take anything away from this video, I want you to go away from it by practicing and believing that whenever you take a trade, whatever amount of money that you have decided to risk, that you assume that it's gone already. Whatever your estimated balance is in your head, subtract the amount of money that could be lost on that trade and then don't let it, and then it shouldn't bother you. If you put a trade on and you're worried about the money of the loss, you shouldn't take the trade and you shouldn't be trading. All right? Scared money is bad money. All right? All right. Thank you for watching this video. I hope I didn't rant too long. I hope I spoke some truth about this. And I hope all of you find success in the market. I hope all of you find the independence that you're looking for. And please do not think that you are alone in the feelings that you're having while you're trading, because you're not. Trading is already lonely. It is already a solitary career. But you don't have to think that you're alone in feeling like a failure or feeling inadequate, or that you are a loser, because all of us who are traders who have been doing it for a while, all of us have gone through that and sometimes still feel that. All right. So talk to somebody, talk to us, ask questions, learn, and practice, and you will get through it. Have a great rest of your trading day, and I look forward to talking to you in our live webinars and in our other videos. Thank you.